Money day, guys and girls. I hope you are well. Today, I bring to you another episode of the Sunday Setups. We actually bring you this Sunday Setups quite late today. It's on a Tuesday, which is our official Monday for trading. But nonetheless, we're here today, and I want to make sure that if you guys have not already checked out the website, litcapital.co.uk, be sure to do so. Okay, we have some amazing educational products. We also have a community that allows you to enter our trading community and trade with us, join our live stream sessions, see what we're trading. We also share our investment strategies and a lot of information that can help you take your trading to the next level. So it's very important, guys. If you haven't already, check out the website. It's pretty cool. It's lit. You know the vibes. It's lit side. Based on that introduction, of course, I think it's more important to let you guys know that we are approaching towards the end of October. Sorry, we're approaching towards the end of Q3, and this does, of course, provide us with a lot of new opportunities into the market. But nonetheless, this also does mean that we do have to be taking every opportunity that we get on the markets before they dry out. And with that being said, be sure to get inside our Discord. We have an amazing community. We have a worldwide branch of traders, and of course, it's best for you to interact. Should I say that again? It's best for you to learn, interact, and trade. Okay. So with that being said, we're going to head over to the economic calendar and see what we've got in store for the remaining week. We can see that this week, the first week of every week, the first Friday, the first official week of every month gives us the NFP, the non-farm payrolls on Friday. So that is, of course, what has our attention. However, we still do have an interest rate for the Kiwi. We had one already for the Aussie. Nothing was changed, but we have now for the Kiwi, and it's expected to be the same results as the Aussie. And we've also got ADP, we've got PMI for the pound. So there is some information, the ECB speaking today as well as on Thursday. So there's a lot of reason for us to be at the charts and to see how the markets can react, because there is a lot of potential opportunities for us to take initiative of. So with no further ado, I'm going to head over to the charts. Okay. Now, the DXY, this is something that I want you guys to pay attention to, okay? And we can see, if I just go to the weekly here, we can see that the DXY really did climb over the past few weeks. The dollar was really stalling around the 93 handle, and it eventually broke this yearly high. And since it's done so, it's actually continued to push to, like what one of our students says, to the upper room, okay? And it's been pushing. And of course, now we can look at it on a daily, we can look at it on an hourly chart, but we understand the same. We understand the picture is the same. Okay, right now the Fed is backing the dollar, and the dollar is taking center stage because it is continuing its bullishness. Now, with that being said, that would mean that on the weekly the structure is broken. Okay, on the daily we can also see we're in a bullish structure as well. So at the moment we are anticipating this to be the higher low, which would mean that we would now be waiting to see price push up and make a higher high. Now, for those who are inside our trading community, you'll know that we're very big on the bond market. And the bond market is actually telling us something different, which is actually leading us to understand that there is what we call mass manipulation at play. But nonetheless, you guys got to be inside the community to understand what we're trying to say based on the bond market and how we depict the bond market from looking at how we compare, should I say, how we differentiate between manipulation and a natural direction. That's really important. And for that, of course, you've got to be a member to find out how we're really breaking down these charts. Now, with that being said, I'm expecting to see the dollar continue to push up today. If we just go down to the 4-hour chart here, okay, because we did have a lit block that I saw just at the bottom here where I thought price could react from, just here, okay. We saw this candle here. I expected to see price push down from it, okay. We also had a lit block here. Price has, if I just line this out for you, okay, perfect. Price has actually come up to this area, and it does look now like it might push down lower, okay? But we haven't closed beneath this higher low here. So potentially this structure is still bullish, which means we still can get a push up, and we are approaching the New York session. It is swiftly approaching. Excuse me, the time is 1:30. So we are actually inside the New York session right now. So there's a lot of reason to believe that we can see some continued strength with the dollar. But of course, if it does push down lower, I will be looking to see if I can catch, or well, not necessarily catch, but if I can see a reaction around the 93 490 handle. Okay, moving forward, because the dollar isn't really something that I'm going to look at too hard. Like I said to you guys already, the bonds is what really takes more center of attention for us, so we can see the true direction. And with gold, we've seen that over the past week, if I just go over to the weekly chart here, we can see that over the past week, we did have gold push down into our mitigation level around 1721 before gold decided to push around and push back up. But again, from a structural perspective, we've seen gold make a new low, which would mean that this equal low here was taken out. A lot of liquidity was grabbed, but we had a new low. Okay, so right now what we can anticipate is for price to push back up around the 1790 handle, okay, for very simply a lower high to form, and of course for us to then figure out if price is going to push up and close above the high, or if price is just going to continue coming down lower. Now I've got a daily structure level here at 1800, and we've seen that prices really given us some good reactions away from each time price has approached it. But if I go down into the daily here, I've also got my green levels, or my green zone, should I say, our institutional levels. And we can see that price is stalling inside of a level right now, which could mean that based on how the stock market opens, which is in an hour's time exactly, based on how that opens, we could also see the direction of what gold is looking to we can also see the direction gold is looking to push as well. But based off of what we've seen here, we have seen gold break. We've seen gold, sorry, excuse me, close beneath this low here. Okay, so this pullback could just simply be price mitigating from an area to push down and make a lower low. So we are kind of in an area where it's best to, in my opinion, sit on the sidelines, see how price plays out, see how today pans out, because of course we do also know that every week of NFP, the markets usually move pretty stale towards it. So it's, it's going to cost you more to presume something than it would be for you to react from seeing something. And based on the results of the news that's going to come out later on today from the ECB, as well as for the NFP on Friday, there is no harm in simply seeing how the market's going to unfold. Now, onto the Mac Daddy, okay, the S&P 500. Now, this was a really, really, really profitable swing here. For those of you who are inside our community on our live streams every Tuesday to Friday from 12:45 to 2:30, we provide live streams to show you guys what we're trading. We share our charts, we answer your questions, and we really do trade these pairs live in real time, and it allows everyone to collect the bag. Okay, we do this in the morning, 6:30 a.m. to 8:30 a.m. GMT, and then we do it in the afternoon from 12:45 right down to 3 o'clock, if I'm honest with you. Okay, PM GMT time. And we really do get a chance to capitalize on the markets opening. Of course, the New York market, the stock market opens at 2:30, so we do get a chance to really dig our teeth into it and have a good lunch, so to speak. And what we was actually looking at as a 5% pullback. We had heard news on Bloomberg which had mentioned that Goldman Sachs had analyzed the fact that there hasn't been a 5% pullback in over a year for the indices. And based on that information, we was able to react. We was able to figure out what price could do from when price was up here. We used the smaller time frames to see price breaking our structure. And of course, once price broke the structure, it came back to mitigate. We was able to catch this short and a few other shorts along the way. But the point and why I'm expressing this to you guys is because if you're not inside a community that can provide you with the right information, then unfortunately trading for you might just be something that doesn't last as long as you would want it to last. And that's why, ladies and gents, it's very important to be inside a community where you can be in the know, and of course where you can have your questions answered. Right? There's no point you learning how to trade by yourself. You wouldn't jump into a car and learn to drive by yourself. You would let a teacher teach you. So with that being said, if you are learning how to trade and you're still trying to perfect your trades, you want better entries, okay, then we definitely would advise you to come over to the lit side, baby. Okay. So what I'm looking at the moment with the S&P is I'm actually going to be looking to see how the market reacts when the New York stock market, when the New York Stock Exchange opens. But just off of the 8-hour time frame here, if I just remove this this line here, off of the 8-hour time frame, what we can actually see, sorry, off of the daily time frame, what we can see is we are inside of this daily candle. Okay, price has come down, it's played into the daily candle. We've probably had about a 50% reaction off of this daily candle. Now, let's see how accurate I am. Well, let's see if I'm full of nonsense. Okay. Now, we can see here, when I come down, that quite clearly my vision is 2020. Okay, we can see we've had a 50% pull down. Okay, so prices reacted out of 50% at this daily candle, and it's holding it pretty well. It's holding it pretty well. I'm pretty confident that price will probably continue to push up higher and maybe just give us another day of consolidation, you know. But ultimately, we have seen, of course, the higher lows broken. So we wouldn't be in the wrong for assuming that price can continue to the lower side. I'm looking to see price come down towards the 4234. Okay, if price can come down towards that area, I'd like to see another wick reaction like what we've seen inside of here. But for today, based on the wick reaction we've already had, I'd like to see price push back up into an area that can give us a potential possibility to short, you know. But off of the daily, I'd like to see this daily candle come right back up to here. Okay, just based on the schematic at the moment, it looks like we're just in a phase of consolidation. So I'd be expecting price to come back up to here. Of course, we never really got price coming to this lit block here. So this candle was still a candle that can be taken out. It's a candle that we can get a reaction from as much as this one. So there is reasons for price to push to the upside. And of course, that's for us going to be more than enough for us to say if we're not already in a buy, what we simply want to be doing is we want to be waiting for the sell, which means waiting for price to push up higher unless we get a reason or an entry, should I say, with price coming lower. Now, I'm going to shoot off. Okay, that's me done. That's a quick outlook. Of course, what I want is to spread the importance of jumping onto our live stream sessions. I'm going to be jumping off of this session, off of this video, onto the live stream session to share my trading ideas with the community and to also listen to the community for what ideas they have as well. So if you have liked this video, I would like for you to drop a like. We want to get 5 likes on this video. That's not even much. 5 likes on the video and comments just to tell us what pairs you trade, maybe what pairs you would like us to go over next time. But more importantly, guys, make sure if you found this video valuable that you hit the bell for notifications so you can see more content that we will be providing. And like I said, get us to 5 likes and we will be sure to provide you guys with a video that's different from trading, something that's actually different that can give you guys some more entertainment, because of course we can't always give you guys financial entertainment, right? That's what this is. Okay, and of course, for purposes of use of those watching the video, I'm not a financial advisor. Please don't take anything what I've said for financial advice. Of course, all this is my idea on what I think can happen on the pairs that I've shared with you guys today. So I hope you guys have enjoyed the show. You know the vibes, it's lit side, and don't forget, every day is money day. Peace.